Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, November 18, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's go back to last week. On this day here, which was Thursday, they closed on the trend line. Friday, they had a gap lower open right into the 20-period moving average. They've broken the trend line. Now they're beginning, ING in italics, beginning to go sideways, building potentially a bearish, flaggish situation, but it's only 2 days in the running above the 20-period moving average, so we're going to give them a little time to bake in the oven. The trend line that they broke, had they rally up to it, will be what's called overhead resistance, at least from a first time, best time perspective. Today was also what's called an inside day to Friday's down day. Friday's gap lower open, still from high to low. It was an inside day to Friday's candle. It's just a piece of information. It doesn't have anything to do with whether there was or was not opportunity in the market today. Speaking of which, what were the numbers? Well, hold your horses. Before we get to the numbers from an intraday perspective, I wanted to take a look at the weekly chart. Remember, we talked about this over the last week or so. We had an on-time type of situation last week, and we did get the down week. You can go back to the videos from over a week ago when we started talking about two things. Started talking about the on-time situation and started talking about the market symmetry situation. And then we was followed by a down week last week. And we'll give that, or we'll issue that one, a funny how that works. Here's a 5-minute chart of the spiders. Right of the vertical is today's activity. Let's go see what happened from a numbers and inside the numbers perspective. So let's get some stuff out here right at 0 dark 30. We've got a pivot today at 486 or 586, I should say, 80. And if they're above, the door opens for a leg higher toward what? 589.30, give or take. So we have an early pivot and we have a leg higher, overhead resistance, and called a target. We have 585 on the flip side of the equation. This is all posted on the board at 0 dark 30 a.m. Now, here's a couple of things on the board. You see the pivot over here. If they're above the pivot, she's bullish. Did we have traders in the live room take that ride? Yes, we did. If she's below the pivot, she's not necessarily bearish, but prone to fall back toward 585. That did not happen. Never reached 585 during the regular session. However, was down there in the pre-market. We call this the thieves in the morning. So if you look at this from a pre-market perspective, you'll see here at 8:20 in the morning and all the way into 8:25, that's where she bounced off of 585 in the pre-market session. It was, as they call them, the pre-market thieves. But above the pivot, she is bullish. Where was resistance and or the target? Remember, it was at 589.30. How you doing? How do you like dem apples? Target / overhead resistance, 589.30, give or take. We'll issue another funny how that works at 0 dark 30. What I urge you to do is pause the video, read the notes, and double check the work back on your charts. We're reiterating the pivot. We have the support, and if they get above the pivot, they're going to start trending toward a target / overhead resistance. And now we had, because they were already open and the market was slow, a zone between 588.60 and 589.30. It's a tight zone anyway. Those are almost the same number. Pause the video, read the notes. It's all in here. Everything traders need from an intraday perspective, starting with where the important numbers are. Where's your pivot in the morning before the opening bell? Where's your support areas? Where are your resistance areas? Go back to the charts to double check the work. We only had two stocks on the move today, NVIDIA and Amgen. Amgen did not hit its entry objective, so it's off the board, but NVIDIA did. NVIDIA, NVDR, NVIDIA. 137.50 was the number in NVIDIA. You know the drill, right of the vertical is today's activity. Here's a 10-minute chart just for a different flavor. 137.50 was the number. They hit it, they spent a little time testing it, and then they traded back up in the other direction over 141. Over a $3.50 gain in NVIDIA. One more time, funny how that works. Take note of the markets that we cover. The Qs, IWM, Smashmouth, TLT, GDX, crude oil, gold futures, silver futures, natural gas, the Dixie or the dollar, and Bitcoin against USD, the Coinbase one. Here are the numbers that were on the board this morning in that table for the Qs as an example. Resistance at 501.60. That was R2 today, resistance number 2. The first one was 498.85. And it was, in fact, a resistance zone. Back to the spiders for a moment. Here's a 4-hour chart. We're going to use this candle here, the high, as the bogey. What's the high? 590.20. You can use an hourly chart for this. It doesn't really matter. You get the same 590.20. We're going to use that as the bogey because above there, she goes to fill the gap and we'll test the underside or from underneath of or to that moving average. Pardon me, not moving average, but trend line. And at present on the 2-hour chart, you can see building a bullish, flaggish situation for 3 2-hour candles after the gap higher open this morning. Interesting information. Is there follow through tomorrow, Tuesday morning, or do we get what's called a turnaround Tuesday? What's going on over in Camp IWM? She didn't really move much today, trending toward the daily chart 20-period moving average, which also happens to coincide with the most recent breakout area. So you can see where those two things converge. The IWM was up less than the SPY today, just by a touch. There's a touch, and I mean touch, small touch, of relative weakness between the IWM and the SPY. The IWM, or Russell 2000 Index small cap space, is my favorite market leading indicator, I'll have you know. So definitely no relative strength on the bull case. So now we want to turn our attention to the transports, which is my second favorite market leading indicator, a number one canary in the coal mine. Remember last week we were eyeballing this potential bullish pattern, but we also said she's overcooked on the upside, needs to A, consolidate, B, come back toward home base, or let home base creep up the price by going sideways. That's kind of what we're seeing. We're seeing a combination of both things. So the transports today were down about 0.5%, and we're not going to make a federal case out of that, 83 points. But above all the moving averages, trend is your friend, but also working off some of the air-quoted overbought condition. Why is there no such thing as an overbought condition? Because there's no measurement for what exactly does an overbought condition mean. What about the Q people? Sideways inside day for the Q people. Inside day to Friday's candle, just like the rest. Hovering around the 20-period moving average. Now, the more times or the more time price spends around the 20-period moving average, the less important said moving average becomes. So now, first time, best time comes to mind, then you say, well, look, she held on Friday somewhat between Friday and today, but now she's hovering around the 20-period moving average going sideways. Is that as important as it was from a first time, best time perspective? The short answer is no, it's not. We've got some unfinished business down here at this gap below Friday's low, and that happens to be right above the 50-period moving average. There's a lot of support down there, just around or slightly below that 50-period moving average on the daily chart. We're going to call it 488 and a quarter for argument's sake. I'm going to lower that just a touch. We'll call it 487 for argument's sake. Anywhere in there, there's a lot of support, 488 to 487. Write that down, put it on a sticky note with QQQ on top. Why am I bringing up JD.com? Because this one's from the Lazy Swing Trader Automagical Algo System. We took about a 6% profit, entry at 33.40, exit today, entry last Thursday. We'll call it a 2.5-day hold. The rest is trader's choice. It's a risk-free, emotionless trade now. Lazy Swing Trader Automagical Algo System. What's going on in the financial space? The XLF. Well, as you can see from the daily chart, they're eating time off the clock in a bullish, flaggish situation. So if I call that the flag and I want to build a pole from down here, look at this. Look at what we have all of a sudden. Now, all of a sudden, you could visualize the fact that if I just expand this down to the bottom area here and expand this over to the pole, there's my bullish, flaggish situation. The risk is they have to come down a little bit to fill this gap. And if they come down a little bit and get below this low from last Thursday, then it's going to break the chain, as I like to say, break the bullish, flaggish, situation-ish thing that's going on. But at present, what we do, and we play the umpire calling balls and strikes, we analyze the information we do have as opposed to analyzing the information that might happen in the near term or the future. Write that down. Put it on a sticky note. What about Smashmouth? The Philadelphia semiconductor space came up short of the 200 period moving average today and bounced. And I'll have you note, it's an on-time type of situation. Where do you learn that stuff? Lazy E-mini trader? Or you just hang around me for a while and you'll pick up on it sooner or later. On-time type of situation. They turned around, reversed in front of the 200 period moving average. Below today's low, and they'll give you 235. They'll probably spike below 235, which will give you below the 200 period moving average. Today's low is your new bogey from a short-term perspective. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.